gentleman from Wisconsin, Mr. Steil, for 5 minutes.
Thank you very much. I appreciate the chair holding today's hearing on this important issue. Reverse mortgage can be really helpful to allow seniors to live comfortably in their homes and the communities where they've built their lives. At the same time, we have a responsibility to ensure that people who've worked hard their whole lives are not taken advantage of and misled through steps to secure their retirement. My district has roughly 113,000 seniors, 16% of the population. I think we owe it to them and to seniors across the country to conduct proper oversight of this program and implement forms to continually make it better. Dr. Goodman, among other requirements under the Federal Housing Administration guidelines for HECM loans, borrowers must demonstrate the ability to pay property taxes and insurance and participate in counseling. I'd like to focus a little bit on what's done on the front end to make sure seniors who participate in this program are able to meet all of their obligations to remain in their homes. I recognize that some of these requirements began to be implemented in 2015. Can you comment if there's been a noticeable difference in performance since that time?
Yes, there has actually been a huge difference in performance since as a result of the financial assessment. So there's been a study that basically showed that tax and insurance defaults from for mortgages that were 37 to 45 months old have declined from 6.9% before the financial assessment to 2.1%. It has made a tremendous difference and was a very positive change.
Could you provide a little color for those of us on the committee as to what this counseling looks like, how it's conducted? Is it intensive? Are there follow-up sessions? Can you just provide a little color to that?
So basically, there's a counseling session. The counseling could be improved, and I think that suggestion has come up. And then there's also a financial assessment where you look at the borrower's ability to pay the tax and insurance and make a determination as to whether or not there should be a set-aside. And I think the power is in that financial assessment test. And I would actually go a step further, and I would actually require no financial assessment and an automatic set-aside. That is the default. And if you want to opt out of the and if you want to go through a financial assessment, then you can possibly get that feature waived.
Let me go back to the counseling for a minute. Can you just describe what that would look like, or the amount of time, or how intensive that is for individuals that go through this counseling?
I'm going to actually...
Or if somebody else has color, happy to pass.
Congressman, I'm happy to chime in on that.
Please, thank you very much.
So the counseling session, the amount of time varies. Unfortunately, sometimes there's only 30 or 45 minutes allotted, but it really requires at least an hour and a half. The counselors are supposed to walk through with the homeowner alternatives that they should consider, such as energy assistance, other programs that are available to help low-income homeowners, and then explain how a reverse mortgage works, which is pretty complicated in and of itself, the different options for how to receive the proceeds of the loan, the property charge set aside now that that's involved. So there are many things they have to cover.
So there's an opportunity to really expand the amount of time and intensity in these counseling sessions for seniors to make sure that they're making the best decision in their own best financial interest in a reasonably complicated financial product that has real significance in their lives.
Yes, Congressman, we think that would be very helpful.
Thank you. I'd like to go back, Dr. Goodman. In your testimony, you recommended streamlining the process for converting a forward mortgage into a reverse product. Can you discuss some of the regulatory hurdles that would make that conversion unnecessarily complex?
Yeah, so there's sort of... If it's an existing FHA mortgage, it should be a little bit easier to do. If it's outside of the FHA market, you clearly need a new appraisal and all that. The advantage is that it would be a much simpler structure. It'd be a one-time draw, which investors should like. It would save on sort of marketing costs. You look at the number of younger seniors that have mortgages, and it is just so different from what used to be the case.
I appreciate that. I appreciate everyone's testimony here today, and I yield back.
I thank